this rainy day. Glad to have everybody here. We do have members of this committee online, Kathy, Penny, and
Benny Nielsen, SDAO.
okay,
She's our consultant.
and Nicole.
More employee.
Employee. Okay, thank you. Don't know who everybody's names are yet. So, thank you. So, thank you everybody for coming in person in the rain. And let's go ahead and get started. Here we go. Pledge of Allegiance. Is our flag over here? I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all. Roll call.
Okay, Commissioner Alegria.
Present.
Member Dieter.
I'm hard to hear you if you're calling me.
Yes.
Perfect.
Member Fleck.
Here.
Member Griffith.
Here.
Board Chair Klezak.
Here.
Member Lansing.
Absent.
Montero.
Present.
Member Jonathan, you'll have to help me with your last name.
Niebuhr.
Thank you, Niebuhr.
Okay.
Thank you. Commissioner Romero.
Present.
Commissioner Stolberg.
He's excused.
I was going to say, I think I got an email saying that he was not able to come.
Okay. Commissioner Teeple.
Present.
Commissioner York.
Present.
Member Wilson.
Present. Are there any changes to our agenda? Hearing none, we'll proceed. Public comment, 3-minute limit per person. Do we have anyone who wants to make a public comment?
I am showing none online.
Okay. And then our minutes from April 30th were in the packet. So I hope you had a chance to look at them. Are there any changes to the minutes as presented? Hearing none, I'll entertain a motion to approve the minutes.
I motion to approve the minutes.
Okay, is there a
I second
second? Guillermo? All those in favor say aye.
Aye.
Okay. Okay. I have to sign them. Okay. So our next is to hear from our budget officer. The budget review, responses to the comments that we had from last time and questions that we had from last time. So David, I'll turn it over to you.
Okay, great. Hello, everyone. I'm going to do this backwards a little bit, but I'd like to turn your attention to page 21, the definitions. I want to go through these just because we talked about this a lot in detail. What I want to try to do is get through the whole what we discussed. Try not to get into the weeds. I want to try to get through this very quickly. But if you have questions, we'll go through them. Just save it to the end and we'll go through it. So what I'll do here is I'll go through the definitions because it'll answer a lot of questions. Then if you look on the last page, 22, there's a summary of changes to the budget. So as I go through those, we can look at the budget. These are the questions that came up that I could capture from listening to the board meeting and from the minute. So there's some things that aren't in the minutes. There's a lot of detail, a lot of nuanced things. I tried to capture most of them, so I'll go through that and then we'll kind of complete this. If you have questions, you can certainly go ahead and answer them. So with definitions, the benefits, we talked about that because the numbers didn't align with previous budget. And there, because we did not know how they put them together, we didn't know how the sausage was made. We had to take a guess. So if you see here, the definition of what benefits are, the dental, health, life insurance, and all these things were grouped into benefits. And then the payroll expense was Social Security, Medicare, and workman's comp. So that explains why those numbers were disproportionate, because we had to come up with a formula. Commissions and proceeds. The question about where that is. The commissions and proceeds are from the charging stations, the electric vehicle charging stations. We have them a lot. Ticket sales. We sell point tickets and other tickets for other agencies through here. And then vending machines. We have soda and pop machines. IGA, intergovernmental agreements. We have agreements with Nevada, Tillamook County, some agreements with the county, and SDAO. So those have various different agreements and different costs associated with them, and those were all lumped together as a way to aggregate those expenses. And then other vehicle sales, we sold surplus vehicles. So when we bought new vehicles, we had 4, we got rid of 4. But we had some extra vehicles that had been sitting in the yard. I don't know if they were lawn ornaments or whatever they were, and we kept them for 7 minutes. We cleared out, but 6, 8 vehicles, something like that, or in the process of that.
Yes.
Yeah, so but we only got about 22,000 for that. So we were.
Can your question wait till he's done with the definitions?
Yeah.
Okay. Payroll taxes. This was workman's comp, Social Security, Medicare. I think that I repeated myself there. Sorry about that. Rentals. So rentals are, we have a billboard. You only get $1,200 a year for it. That agreement was made a long time ago. And then parking space rentals. That's why there was a slight variation there. And then there was a discussion about STIF. And there's 2 STIF funds that we get. One is based on employee wages within the district, and we get those STIF taxes. And the other one's based on a statewide collection, and we get some portion of that. So there's 2 different STIF funds that are called the same thing, but we get money from both of them. And the last thing was the unappropriated ending fund balance. So Benny was really helpful and instrumental in helping me put these together. And as we talked about this fund balance, we talked about having to have money that carries over between the beginning of the fiscal year and when new tax revenues are received. And so the unappropriated balance needs to be about 4.5 months worth of that tax revenue. Okay, that's it for definitions. Tina, you got a question?
Yeah, I got a couple of questions.
Is it pertaining to definitions?
Yeah.
Okay.
You used to have payroll expenses and payroll taxes. Where am I going to see payroll taxes?
That was I mentioned it in my presentation. It's a duplication. I had it on one line, also had it on another. So that's
It's
redundant.
not on the other line now.
That's a redundant sentence. I had one here for payroll, I had one here. So payroll taxes just cost.
Okay,
That was a
I
duplicate.
didn't understand. Okay,
Right.
and then on the IGAs, those you have as expenses. So what do we pay Tillamook County for something?
Yes, well, there's in Nevada, we pay them for we're part of that membership. Tillamook, we work with them on, there's a, what do you call it? Fare medium that we share for their bus and our bus. I don't know exactly how that works.
And we pay to Tillamook County for that?
I'm not sure how that is done. They pay us for things and we pay them for. And I don't know how that agreement is. Couldn't tell you specifically. It's not a lot of money. It's a pretty small amount for tickets.
And then you've got county and municipal partners. What do we pay Clatsop County Board of Commissioners for?
Well, I think this was
What do we-
I think this was not only financial ones, but other IGAs that we have. We have agreements with these other agencies.
But if you're listing them as requirements, that means they cost us something. And so if I
I
want
think what we
to
would
find
do,
out.
we did is drop the search of the internet to see what IGAs we did have. And we included these in there. I don't think we paid them anything other than things like that are defined, like election fees and things like that. There's specific fees we paid.
But we wouldn't have
We don't-
election fees under IGA,
No.
we'd have election fees separate.
Yeah, but
It's just confusing to me to see them listed if they're not a cost to us.
yeah, as I mentioned, some of our IGAs have no cost. We're working on one now with the city of Astoria for emergency response. There's no cost until we actually incur. Or there may be a cost to them, but until we actually incur any cost, the IGA just allows us to have an agreement, allows us to incur.
And so then rentals,
Mhm.
you indicate, so we're paying a 25-year lease with Lamar.
We're receiving rent.
Okay, so where are rentals then in our resources? Because I see rentals. There it is. I want to make sure I see this.
It's line 8 on 14.
Page 14.
Mhm.
Rentals. So rentals and so for this is the parking spaces we rent out, and Lamar Advertising pays us for that. For right?
Yeah.
Yes, line 8. Got it. Thank you.
Pamela?
I don't understand how you, the appropriated fund balance determine the amount.
Well, here I'm gonna go to the bullpen. That's Betty. Betty, can we put Betty on the screen? She helped me with this.
So am I a lefty or a righty if I'm coming from the bullpen? I'm just
Well,
joking.
whatever.
So the unappropriated is computed as the difference between the revenues versus the expenses that we know we are going to incur. But we want to make sure that we don't, that we have about 4.5 months worth of unappropriated funds. So, so that's how it's calculated. It's the difference between the revenues that we know we're going to budget and the expenses that we're budgeting, and the difference is the unappropriated. And then we're just verifying that that is about 4.5 months worth of expenses.
Thank you.
Is the unappropriated fund balance like a reserve fund? I guess I'm getting confused.
Betty, back up.
It's sort of a, it's basically where accounting meets budgeting. So it's not a reserve. It's typically what your cash balance is going to be, that you have already, you know what your beginning balance is that you're estimating. That's in the LB20 form. And then you look at all the revenues that you're going to collect. So you're just making sure that it's sort of related to cash, but not necessarily cash, but it is just the balance that you're not going to spend that you're going to be able to spend next year. So it's really what you're going to have as cash about starting fiscal year 28.
And that is a standard, basically requirement for any agency to have so that you can pay your employees and everything else between July 1st and mid-November or so when you get your tax revenue from the county. So you don't have a paycheck during that time.
Emma?
This, on page 22, this refers to, what it
This
says,
started on page 22.
I know, it's just a question about, it stated, this is on page 16, but unappropriated ending fund balance of $100,000 capital reserve, not the current budget. Aren't there two separate items, the capital reserve?
I'll get to that. It's two different things.
Right,
Yeah,
but it
two
doesn't sound like two different things.
Well, it's the same kind of reserve, but it's in a different bucket. So it's a capital versus operating account. So it's not even in
I
the
know,
current.
but why is it in the season?
We'll get through it. Let's wait till we get there and can explain it. Okay. And
Hey, since we're on the topic, I was gonna save this, but since we're on the topic of ending fund balance, is it accurate to say, or at least Betty, is it your method that the unappropriated ending fund balance should be the beginning balance for the following year? Or that might head off multiple of my question.
Not always. So in some cases, yes, and in some cases, no, because typically they are one and the same. The ending is the beginning of the next year. But remember that these are based on estimates. It's not always the case. There's some adjustments that are made at times in the books, and you know that they're going to hit that fund balance.
Could you explain that a little further, please? Because if that's money that's cannot be touched that year, it would seem to me that that is what our beginning fund balance should be the next year.
you've got starting balance left over.
That is what you're going to, but throughout the year, things happen. You receive more. So the minute you approve this budget, it's wrong because you're going to get more revenue or less revenue. You're going to get more expense or less expense. So we projected what the ending fund balance is going to be as of the end of February 20 or fiscal year 26. And we're saying that that's going to be like 1 point some odd million. But the actual, and that's based on our projections and 9 months of actuals, right? But in last year's budget, that unappropriated amount is going to be different. It's going to be plus or minus whatever differences we had in revenues and expenses. So they're not going to be the same.
Okay, so let's see if I'm doing it right. The beginning fund balance for the next year is the ending fund balance or the unappropriated ending balance plus anything that's left over from the current year. So it should be at least the unappropriated ending balance. That should be the minimum, right?
It's again, it will change just a little bit because if your expenditures are really, if your revenues aren't meeting their amounts, and so that they might adjust it, or if there's some kind of adjustment that needs to happen to your accounting records that adjusts your unappropriated fund balance.
So if the ending fund balance has to be adjusted during the year, the board would have to be consulted and would have to approve to go lower, because it's my understanding you're supposed to be reserving that and not touching it.
It's not a reserve, and so it's again where accounting meets budget. So currently, I don't know the transactions that are happening at the transit district, but in my current position, we've had many adjustments to the fund balance because in prior years they recorded revenues twice. So you can't change that and record it in the year that you're in. So you have to record it to fund balance, for example. And so there are adjustments that happen to the unappropriated fund balance that the board doesn't need to approve or disapprove. It's not an expenditure, it's an accounting adjustment. And that's why there's some adjustments between, so they're not always going to match perfectly. Does that make more sense?
Go ahead, continue. I'm not gonna, so good, continue.
Emily, did you have a question?
Well, we'll just move on.
Okay.
Okay, thank you. I'm gonna go ahead and go through the summary of changes, on the last page. And, some of them are pretty self-explanatory and,
I have to tell you, it's really difficult for me to just do the summary of changes. If I would much prefer we go down line by line and say there's no change here or this was a change. Because if you do the summary, you're bouncing back and forth between the
Well,
pages, and that's really difficult.
what I did, and I just took the summary of changes and I went through it, because I don't want to rehash every line. I think we've already done that, and I'm trying to get where there were questions or there were, things, so I tried to make it to go, in a straight line. So if you go here,
Can I suggest one thing? Tear off your sheet that has the list and then open your budget message to the first page where he's talking about the changes and follow along there. Because then you can see exactly what he's referring to, but you can also see it on this and you're not going back and forth.
And I've also written the
so
amounts for April and May.
I did too.
Okay, so you have
I'm looking at the difference between what we got in April and what we're getting today. I have that too.
okay.
All right, let's go ahead and start through this. And again, page 8 is
some of the pages are a little off, and I'll try to keep us on this page because the board pack is different than the presentation and actually not even using the
So if
presentation.
you just give the title of the page maybe as well.
Page 8 is the budget process timeline. And the last line there was July 15th. And there was a typo that said we changed the county from the county, which was in the state, to Clatsop County.
Right.
Simple, easy to explain. Go to page 14. Okay, let me just click around with it here. 18. And there was a number of, and I talked about this in definitions. There's a stiff tax, we had a state stiff tax, and we had a local stiff tax. So I'm trying to explain the difference there on page 14. We show the stiff fund and the stiff formula fund and the stiff discretionary funds. And you look above there, it says state, mass transit, payroll, distribution. That's a stiff fund. And so I was trying to explain that they're kind of one and the same, but one is collected locally and one is collected statewide.
it needs to be in
So-
locations.
That's why they're two different ones.
Okay.
It's my understanding that if you have nothing listed in the far left column, second preceding year, if all of those are blank, you do not include that item in your resource description or your expense description. You have to wait those 2 years that you're showing that the money is sort of creeping further and older, and then you delete that line completely. So to have the line 18, we don't need line 18 because it's now more than 2 years old.
Can I suggest that we not worry about that this year? Because it won't make a difference in our bottom line. But it would help explain all these different categories to people. And next year we can reboot them. Because I do know that is the case, that if something hasn't had anything in that line for the whole list,
Yeah,
we need to take it off.
yeah.
But let's not worry about doing that.
Yeah, it's not
Because I-
material, but we can make it, we
We've
can.
got it in several places in this
Yeah.
whole budget,
Yeah.
so.
Well, then I think that's
So-
fine, and but let's not worry about it for this year's budget.
I
Because it's
understand.
not gonna make a material difference in this year's budget.
Okay.
Okay.
Yes.
Okay,
sorry.
so
Are we looking at the updated one or the one that's stapled to the package? Because they're both summary changes, but
oh yeah, I'm sorry.
they
I
have different.
let's use this one. This one is the most accurate. And I'm sorry.
Okay, what page number is that?
It's a separate page.
The one they just handed out, this one handed out.
Yeah, because the page numbers were a little wonky and
I did not get that.
Can I
No,
go
it's over here.
Tito?
And I see. Yeah, it's this one.
Yeah, I don't have one of those.
Okay, they were over here to hand out.
okay. Sorry about that. Let's see here. So page 10, page 11. It says page 7 is now correct, so that should be page 11. But page 11. You look at the yeah, it's here. Okay. It was this number here that came into question because it was lower. We assumed that property tax was not going to be lower. We thought there'd be a slight increase in property. So what we did was, rather than use the information that we had historically, that we had projected, we looked at the historical numbers. If you look at 22, 23, and 24, and even 25, you can see we had enough of a sample size that we could get a number of a trajectory on that. So we just used those numbers and said, okay, at the rate that they've changed over time, we're just going to go with that formula. And then we looked at it a little bit deeper and found that, okay, there's going to be a little more money there. But rather than, we thought there might be $30,000 or $40,000 more dollars. But rather than say, well, we're going to take $40,000 and throw it on top of there, we wanted a more conservative approach. So we just took our base formula, which was the average of those actuals, and then we added 23,000, which was kind of a split difference thing. And that gives us a number that we're really comfortable with. It's conservative, and we feel that we can manage that.
So that's the number for property taxes.
Yes, that's the property
which
tax.
is line number. We're still.
This was in the
This is the page. we're on.
presentation. This is the presentation here.
See, that's-
So that's on page
Yeah, I got it.
11.
It doesn't correspond to what's in the register. I see it. So you're saying the line that we need, the column that you're looking at is FY26 adopted, right? You
I'm
haven't
looking at
adopted it.
FY27 proposed.
So property tax includes, if you look on the LB20, it includes that line, line 23, but it also includes the previously levied taxes of 23,000 on line 2.
Okay, so there,
Okay.
so that should match page 14, but it doesn't. So there,
It
on the
does.
one version,
It
we had
does.
this.
David, it matches. If you add the 23,000 plus the 1,293,000, you come up with 1,316,000.
Okay,
Okay. And that's the line 3 and line.
Yeah.
20 combined. Okay.
3 and 23.
2 and
And
23.
more
Yes.
taxes, that's okay, we can accept them.
Okay, now. So,
Okay, I'm over here celebrating. You guys can't see this because it matches.
okay,
I didn't hear what she said.
It's very difficult to hear you, Betty.
okay, Ben.
I'm sorry. I'll stop talking. I was celebrating and saying whoop, whoop.
Okay, so, page 13. There was a request that we expand the org chart. We expand the org chart.
So can I ask on that? Where is the paratransit supervisor and paratransit?
That position was eliminated in this one.
So where are your paratransit drivers?
They're listed under, bus driver. They're all grouped
So
together.
you have two bus supervisors
Yes.
and you are because that doesn't make sense. You say had 27 FTEs are projected for this year, and you're proposing 28 FTEs for next year, but you're telling us you're cutting a position.
Kind of two positions. We were funded for 30 positions. We never realized 30 positions.
So
So the budget is,
cutting the paratransit supervisor. Okay, and I will just tell you, who will manage? And
so that's not really a
supervise
budget
the
question, Tina.
Well,
think it's gonna be hard for me to kind of switch hats and kind of go into operational things. I'm trying to go through a budget process here. We have talked about it. We have made contingencies for it. Our focus is to focus on drivers and customer service. And we're going to do that. We have to make changes in the admin structure. We're reducing that accordingly. How we're going to do that? I mean, we'll like everything else we have to do as we go along, we'll be able to manage.
And I'm assuming someone else will manage that section of your service. It will just be under,
It'll be distributed with the supervisors and some additional help.
yeah, so it's not like they won't,
The work continues.
you're not eliminating
Yeah.
paratransit.
No.
Yes.
Just perhaps if you mentioned, because I don't understand the difference in amounts between the 27 personnel and the 28, and it would help if you put a note, in the description that you're eliminating the paratransit supervisor, which is a higher salary than others, which would help explain some of the differences, because your 28 employees figure amount is lower than your 27 amount, which I don't understand. But with something like that, you can understand why it's lower. Do you understand what I'm saying?
We were budgeted 30. We never hired 30 people. We never
No.
had 30.
No, that's not what I'm saying. I'm just saying you have in your packet 28 full-time now, or whatever, and 27 the previous year. But the amount of the 28 employees is higher than the 27 employees. So you look at that and you go, well, why is that? So if you've eliminated a managerial position, that explains somewhat of why 28 employee figure is lower than 27. So if you put explanations like that, it helps to understand where these figures. That's all.
Line 14. On page 14, line 1. There was a question about why cash was so low and then went up to over $1 million. I cannot attest to the accuracy of previous information. We can tell you what money we had when we started this and what we calculated, and Betty was instrumental in coming up with the calculation. We're trying to true this up to some extent. There was a $400,000 carryover. That was not $438,000 and something. That was carried over. That was not included
Carry over from what?
from STIP. We receive that stiff, we will receive that stiff money. We have the, well, I'm not really sure how to explain it. That stiff money will be part of our new amended stiff plan. We'll be able to spend that. We had it, but it was never in a plan, it was never defined, it was never in the budget.
So you couldn't spend it.
Couldn't spend it.
Yeah.
So that takes and puts it into this.
Okay. So now it's in the plan, so now you can spend it next year.
Good.
Okay.
Rentals, IGAs, we talked about those. We got a column for actuals, so on 14, 15, and 16, we had actuals, where we had actuals.
I do appreciate your 3/4 of a year, your up to March, and then your projections for the full year. And again, those are guesses of what we're going to spend in the next.
Line 15.3 and line 15.4, those payroll things we discussed.
Okay.
And then page 15, on the meat of the budget, you'll see there's a number of lines here. What we did, we added budget or amounts to projects that were listed below. We added to the projections that the revenue or the expense was higher than projection. And we added the budget as requested by the budget committee. So if you look at line 10 on page 15, we added advertising. On line 17, dues and subscriptions, we adjusted that up. On line 18, intergovernmental agreement, we adjusted that upwards a little bit. 19, 21, 23, you can see all those all the way through line 38. Any questions on those?
So go over that again.
Okay,
What line did you start with?
line 10.
For timber revenue.
No, we're on page
You're
15.
on resource, you're on requirements.
We're on page 15, so
Summary
30.
changes.
You're on requirements. Line 15. Is that what you're telling? 10.
Line 10.
Advertise. So, and you added to that because?
There was either an adjustment, okay. So we added.
Line 15, we added 5,000 because of a comment from somebody for public relations.
But that's
So,
not
for the-
advertising. No, that's a comment. I made that comment and it wasn't about advertising. It was about a person to do public relations. And I suggested that that needed to go into, professional services.
And that would need to be a vote by this group
Right.
as an adjustment to the budget if the rest of the group agrees with that.
That's right.
Right, so at this point,
If we-
put that down as something that you may want to make a motion later on.
So what I tried to do was find within our budget a reasonable accommodation for finding ways to address those comments. In the case where we wanted to add a position, we're in the face of reducing positions
I did.
and reducing our budget. We don't want to add an extravagant amount of money for an expense that's not necessarily our priority in terms of our strategic plan. So what I did was I put a dollar amount in here so we could have some money to address that with. But really, we don't have the resources to do a $50,000 to $75,000 contract outreach. So I put a $5,000 in here as a seed money. It's a way to get started with that. And by putting in here, it's a simple way to just add a little money. We can start looking at that, but we just don't have either the resource or the bandwidth to do it at this time.
Advertising is not public relations.
That's how we felt we could accommodate it. Simply put it in here and, you know, what do you call it? The semantics or
Not
the
semantics.
Well, tomato, tomato to me. And I'm trying to find a place for it so that we have a placeholder for it. We have money allocated for it, and we can at least get started in that direction. We don't have a direction from the board to go that way, and we don't have the funding allocated for that. If we wanted to spend that much more money on something like this, we'd have to take it from somewhere else. And that might be reducing an FTE somewhere else. And I don't think that for the sake of this budget discussion and for the sake of where we are presently, we can do that. But if you wanted to have that discussion, then of course, let's have a placeholder for it. And we can have that. That was my attempt at trying to address it in, I thought, was a reasonable manner and having some seed money to get started. And as we kind of moved through this, we have a lot of other needs that have been identified as more urgent in terms of keeping the bus operation going, keeping recruitment and hiring going. This was not identified other than in this your particular comment as being a priority need. It was not in our strategic plan as a priority need. And so it just really a compromise way to say, wait, that's a good suggestion. We really like to pursue that further. But in this budget, probably don't have that runway to do it.
And as I said, the process is not just to take a suggestion and make that big
No,
of
it's
a
not.
change. It needs to be a vote at the end of this process. So, Laura?
Is there a definitional obstacle to putting it into outreach line 21 instead of chapter 11? It's a little bit more.
I would
outreach,
put it-
a little closer.
Outreach,
Can I let David?
Yeah.
Thank you.
Yeah,
Just to-
you know, we just want to account for it somewhere.
Exactly.
That I don't have that specific heading in here. I didn't want to.
Well, you do have outreach. Outreach is.
Yes,
Yeah.
but again, it's semantic,
Okay. that's
right? However we want to do it, we're identified 5,000 for that.
Okay.
And so we can do that. And regardless of what we call it, outreach, advertising, we call it coconuts. We're going to do that particular type of thing. That was my intent.
Okay, let's go on. Talked about line 3. and 4.
I went through 17, 18, 19, 21, 31, and 38 were adjusted. Are there any questions about those in particular?
If you have an income for the ticket banks, you know, you've got an expense for ticket bank. Do you have any?
We don't have a contra revenue source. We put it in with, I
Just the
believe it's
knowledge.
outreach,
Okay.
and we're going to spend the money and account for it. The idea of having a ticket bank is so valuable to us. We want to move forward with it. The concept of building a contra account and doing that, I don't have that expertise. I think it's $2,000. It's really not a significant or marginal amount of money. So we figured we could, by having that in there, that's 2,000 runs. We can manage that in our process by doing that back in clipboard. And then when we have a chance, when we have a little bit more runway here, we can look at how we can do this. This in a lot of ways is a reconstruction effort. And a lot of this is a redirection effort. This is a 95% solution. This is not perfect. And the time you need to get it perfect, the time, the investigation, there's a whole series of things that need to be looked at. And in the time allowed, we can't. So I'm doing the best I can to put this together, to get this through. We will be able to move forward. We'll be looking at it throughout the rest of the next year.
And see how that ticket bank concept
Yes.
plays out in the budget.
If it doesn't.
Because there's no money
cost.
that's
There's
coming
no
in
cost
for it.
either.
You know, it's just free printing
Right,
tickets.
Yeah.
I think there are bigger implications, but for the sake of this budget, I think that was just the simplest way to do it. Plug in a number,
Good.
we'll manage it. We need more runway to figure that out.
Good.
okay, so line 19. Our projected for this year is 10,000. The first budget you gave us was 31,000, and now it's 61,000. What makes up that? What's that extra 30,000?
Cybersecurity. We need an additional firewall. We have old desktop computers that are no longer supported, and those need to be upgraded to modern computer. We're going to, as we replace desktops, we're going to laptop.
And was that
And
a number you didn't have when you put the budget together originally and realized that you needed to get it in
I
there?
think what we were trying to do is find the right spot for it. And so this was identified as,
Strategic plan.
I left it out. Yeah, and it's in our plan. And so we were moving forward, with trying to capture that.
So the COMP needs computers.
Yeah.
Cybersecurity probably comes under more like your taxes, license fees, and internet.
Again, there's an element, okay.
That's
That's
what
the
I
expenditures.
would not.
Because
There's two elements to cybersecurity. You have a hardware component and a software component. You have to, we budget those separately, and I omitted the hardware component. I need to buy a special type of server
Okay.
or a desktop unit or
Okay.
different types of equipment. So, yeah.
So why not we do?
Okay.
Okay, then,
Any other questions on line 10 and line 38?
so line 38.
we're not there yet.
Oh,
I
you
just
just
said
said
38.
it.
I said
Oh,
38.
okay. I was looking at 31, where you just
Okay.
modified it.
So there's no
So-
questions. I want to keep moving. So
So
line
we
38?
use- We're projecting 16.5 for this year. You originally had it at 18.4. And now it's up to 30. So tell me what is extra there?
Because there was an increased calculation, we discussed it in the last meeting, and we discussed that it went from $60,000 in vehicle repairs to $220,000. We doubled that number. We did not increase the shop supply proportionately. So we increased shop supplies, decreased maintenance to make them both reflect the relative value. We're guessing at this. We have older vehicles. We expect there to be significantly more maintenance on them. And I met with the maintenance director the other day, and we went through a whole list of needs, things that we've deferred, things that we just don't do, and we need to do these. We just, there's just example. I really don't like that. I'm going to share this with you. There's a bus that has like a seat that's a little long. It's a Freightliner bus. Everybody likes, well, not everybody likes the bus, but nobody likes the bus. But this one has a bad seat, right? So there's been incidents where they get in this bus and they say it's broken. There's something wrong with it, and it's because it's got this crummy seat. We got an older bus. Do we really want to spend, $5 or $10 grand on a new seat? Well, normally you wouldn't. You tell them just, fuck up and but in some cases, we just gotta invest and buy a new seat. The bus will be with us for another 5 years. We bite the bullet, we buy a new seat. Drivers are happier. We get a little more performance out of that vehicle. It's I don't know, when you're used to living in the margin and you're always trying to cut, sometimes the drivers don't get what they need. So I identified, I don't know, a dozen of these things that drivers need, and we're going to fix this. Whether it's a shop tool, an analyzer, a piece of equipment that needs this, or a piece of equipment that needs that. We have one vehicle that transmission slips a little occasionally. It's a new transmission. I mean, this stuff here isn't like any big revelation. It's just trying to have a more fundamentally sound maintenance program and investing. Okay, team.
Car alarm.
I put that pulling my car there. Okay. Line 55. So the ODOT loan. This was interesting because our loan payment amount is less than this, but the funds we have allocated for this is greater than. So we have to show the greater amount that's allocated. So at the end of the term, because again, this is money that's we receive in our grant for this purpose, we have to budget it for this purpose. We can't take it and put it somewhere else as much as I'd like to. And so that number's higher than what our actual debt payments.
Will you describe that one more time? I don't.
Okay, so our debt payments, 390,000.
Okay.
We put 474 in the budget.
Yeah.
That would show us 84,000 extra.
Sure.
Well, we gotta leave it in here because the stiff money received to pay for that loan is 474. This is how much money we have.
I see.
So that's the money we got. It's dedicated for that. I can't spend it on anything else. So therefore I have to lock it into this, even though, and then what I'll do.
Do you have to give that back if you don't?
No, I have to do what's called a stiff amendment.
Okay.
So I will buy, we're doing a new stiff plan starting in August. Yeah, for us. And we'll take that extra money out of it.
That makes sense.
We just have to show it in this category.
Yep, that makes sense.
Okay.
And does that finish off our loan payments next year? Are we,
I don't have the schedule in front of me, but we're gonna be substantially complete by the end of the year. I think there's an $80,000 payment remaining. So something like that, I'd have to look.
No, that was.
Yeah.
Could you use the full amount? Okay. Would it make sense to do that? Because that's about what's left over anyway.
We kind of did that,
Okay.
and then we took the money back, and there's a whole story there that I don't want to go into today.
Sometimes they don't want you to pay more.
Well, they do. I mean,
Okay.
the biggest problem is the way the STIP process works. And it has to be in your plan.
Got it.
We
Okay.
just amended the plan. I have to do another amendment to the plan. I have to do a new plan.
Sure.
So rather than move a whole, like trying to maneuver this money around.
Yeah.
It's just, this is how we identified it in this budget.
Sure.
We know what it is, we know where it is, we know what it's for. And rather than try to move it to a stiff amendment or any other thing, we're just gonna leave it because it's not gonna happen. It's a 95% budget. I can't fix everything as much as I would like to. And I'm learning this as I'm going. So this is, I mean, the best part about this is I've learned so much about our budget. I know this budget better than I ever expected to. I mean, I know every line now. And that's good for me. You know, but I usually don't get into the weeds on the $3,000 purchase. I usually don't get in the weeds on, you know, how much money we're spending on shops. I mean, I have a macro idea. And so if it's 50, if it's this much proportionate, I want it to be proportionate.
Yeah.
But I'm not saying if they're buying this many rags or that many towels or an extra battery or tires. I'm not gonna, I can't afford, as much as I might like to, get into the weeds like that.
So, yeah.
All right.
Did you have a question, Pam?
I tried to find, there are different figures on different financial statements about the ODOT loan. Tried to look at what the bank had sent. So I was wondering if in the future we could see the payments.
I have that. I will provide that at our next meeting.
And so that we can.
That sounds like a good thing for the board too.
Yes. Make a note of that, but I will provide to the board meeting the loan schedule.
Okay, thank you.
You will have that.
Okay, 162.
Unappropriated fund balance, 100,000 in capital. So this is where we talked about, there's two different unappropriated fund balance. This is capital. The capital is for vehicles, buildings. The other one is for operations. So this was a line item. If you look on number 62, there's 100,000 in 24-25 that disappeared. So they had $100,000 fund, and then it was not carried forward into the next one. I on the very last question here, very last one, I'm going to come back to this. So if we can just move on, I'll come back. Okay.
But, okay.
Yeah.
Thank you. Okay.
We'll come back.
Page,
Oh, Pam has this question.
before we go to a different page. No buses. Go to it.
Oh, that.
Here's one. We applied for grants before we have a budget. So I'm applying for a grant for next year for buses. I don't have any money in the budget for buses because I don't have any grant money for a bus. So I have a choice. I spend $800,000 on buses. I have to have $80,000 in reserve. No, actually, $160,000.
Right.
Yeah, so I have to have $160,000 instead of being able to use it for something.
Okay.
I would put it in a reserve fund, and I would do that every year until I actually got bus. So we can't afford to do that. So example, if I get an award next year, we're lucky enough. I mean, there's $3.5 million for the whole state. So our odds of getting a grant are like 0, but we could still get a grant. Maybe not this year, maybe next year. But when we get the grant, the buses take 2 years to get, a year or two to get.
Okay.
So even if I got the bus, if I, by some miracle, I was awarded this bus, and they said, you're going to get buses next year. I'd be going, yay, I'll take it. Then I would budget next year, in the next budget, that money to cover it, because then the buses would be delivered. I mean, trust me, I did the grant for next year and the year after for $1.6 million, something like that. And we don't have any money for it, which is crazy in my mind, but that's how we do it. And if we get the grant, and they're saying, you're going to get this money, then we would take that money and we would allocate it in next year, because that's the year we're actually going to receive the bus.
And have to pay for it.
And have to actually write a check. Okay. So it's, I don't want to say voodoo economics, but that's not what it is. It's
Well, you're not going to need to expend the money in fiscal year 27.
no matter what.
So there's no reason to put it in
Yes.
fiscal year 27. But
Now, in
yeah.
other agencies,
That's
you
the
had to
one.
show the money in your budget in order to apply for the grant. But
That's not required.
where rural doesn't have those same requirements, and we don't have that kind of money. Because, if I put $1.6 million or whatever it is, if I'm getting $1.6 million, I'd put 800,000 or whatever it is, 400,000 in the bank on the hope that I might get a grant. And
Yeah.
we're not going to be able to offer it.
Should,
What do
that's good.
Yes, Tom, makes sense.
What is on page 16, line 51? What is the $50,000 for your proposed for?
Where am I?
Page
I know.
16,
I
line
can see that.
51.
The $50,000,
That, okay.
isn't that the money you have to
Okay,
pay back?
huh?
Isn't that the money you have to pay back?
I have to go back. So we talked about it last time,
Yeah.
and this is kind of a quick conversation. We received 700,000.
Yeah.
Our buses cost 650,000.
Oh, I see.
And we had 50,000 left over. Can't buy another bus, can't buy any pieces of parts.
You just have to give that back.
We keep it on the books
Oh,
until
we keep
we close out the grant,
Yeah.
and then we pay it back.
Okay.
So we have to carry it. I asked them if we can keep it, and they emphatically said no. All three
So it has
times.
to show as an expenditure
Okay.
for fiscal year 27.
Okay.
Okay. Thank you.
67, we talked, line 67, we talked about that. Line, I have done it twice, I don't know why I said it twice. Page 17, line 2. Okay, this cash on hand. I'm going to go to the bullpen. Okay. Betty, are you still with us, or have you?
I am definitely still with you.
Okay, let's talk about cash on on the LB10 for STEP.
You want me to do what?
Just explain that there was a question that we
Oh,
modified the balance.
So someone started this discussion with, is the balance from the prior year, should it be the same as the beginning balance? And so if you look at what we're saying is our projected plus 9 months of actuals, which we did not have the data to break out these by 9 months data and the projected data, like we did for the LB30, and I apologize for that. So the difference between the 1,117,707 minus the 767,000 that we're projecting in expenditures equals $368. And that's why we changed that number in line 2 of the proposed budget.
So can I ask for a clarification?
Mhm.
On this form, LB 10, that cash on hand, the 350, is not part of the cash on hand on page, on line number 1 of the resource description. It is a separate fund. Am I correct?
Yes.
Good.
Yes.
I wanted to make clear. Otherwise, it would be counting that money twice.
Yes.
Okay.
So of the 350, why isn't that 350,068 down on line 25 in the actuals and projected? This is where I keep getting hung.
On the same page.
Same page. Yep. And this is the easiest place to look at it because it's on one page. You don't have to flip back and forth.
Okay. So if
Say
you
that
look
again.
at line
So
2,
I'm looking, why isn't this cash on hand, right? Your cash doesn't
The
change
resource.
generally from 11:59 p.m. on June 30th to 12:01 on July 1st. So you're saying on July 1st at 12:01 you have 350,068 in cash on hand in this fund. So why isn't that 350 reflected on line 25 of the actuals and projected for the same fund?
great
And
question.
that is true of the other items too on this page.
Great question. And that is because
Okay, let's listen to,
that is the cash on hand that I was told is the beginning cash on hand for the year. And so that's $242,000 cash on hand at the beginning of the year before we recorded the revenue transactions and the expenditure transactions. So that's why that is like the cash on hand at the very beginning of the year, minus or plus the cash we received in revenue, minus the cash that we paid out. And so that's why it's 350 instead of the 242.
Sure. I understand that, but that 350,068 should be on line 25 of year-to-date actuals and projected. Otherwise, your resources don't meet your requirements. Otherwise, your entire sheet's off balance.
So your actuals are never going to balance to zero like your budget does.
No, but your projections should.
And that's what we're to my knowledge, it's not cash. The unappropriated fund balance is never filled out when you're doing the projections for the year that you're in, the current year. So it would be the 242,375. We could put it in there if you want us to match everything and have it to be zero. But unappropriated ending fund balance isn't always cash. And that's what I was trying to tell you. Because cash includes, like if you have some of this revenue that you record as revenue, but you don't actually receive it until the next year. So you have an accounts receivable out there. Sure. So we're projecting that we have cash that's actually in the bank at the beginning of the year at 242,375. And then you take out the revenue, or you add the revenue, take out the expense, and that is the new cash balance that we're estimating for fiscal year 27.
So
I don't agree, but I will move on. I don't need to be the one that hangs this up.
So can I ask a question then too? Does this account, the STIP, and David, you're probably the one to tell me this, does this equate to our bank account that is called the STIP account?
No, this shows how much money we anticipate having that we carry forward, plus what we intend to receive in the year. For our income.
So it's not a favorable right this minute. No.
We haven't got it. We're building a budget based on projected state money we're gonna get and based on federal money we're gonna get. We get money on a reimbursement basis. That means we spend the money, tell them this is how much we spent, and send it to them. They write us a check for that amount and send it back to us. We put it in the bank.
And when they send us that money, which bank account do we put it in? Because we have 6 bank
Depends on where the
accounts.
money comes from. So if the state money goes in the STIF, the LGIP account, well, I really don't, I'm not prepared to answer that question in the budget. So there are places it goes, they go in the appropriate buckets, and I'm not prepared to like slice and dice it here.
But the concept is that this
The
is
state
not
money
going,
goes in the state bucket. If it's
this is
federal
not going
money,
to match a current bank account.
No.
Because this is projected in 2026.
we're anticipating this money.
Yeah,
We've got that money. We're gonna spend some amount of money.
yeah.
And all this has to reconcile over the course of each quarter. And we're gonna spend. We won't spend enough money and won't get as much for reimbursement, or we'll spend more money and only get some of that. And it becomes a process where we're trying to hit that spot. To hit the right amount.
Pamela?
So is this on line 2, is that figure totally a projection, or is it a combination of actual cash plus projected revenue? Maybe I
It's
just-
actual beginning cash balance that I was told is the actual beginning balance of cash on July 1.
And how do we know that's the actual, we must be looking in some bank account to know that amount of money.
The
And
finance
reason
gave me
is
that number.
because we have a bank account called the STIF account. As of this morning, it had $598,000. So when we get money, we put it in different accounts. And to me, this fund, the STIF fund, should be reflected in our STIF bank account.
That's what we're estimating it. As near as I can tell, we're estimating that account will have this amount of money on July 1. We don't know what our reimbursement's gonna be, we don't know how much our payment's gonna be, we don't know how much our expenses have been. So, and we're also in arrears, so we'll get that money a quarter later, so this is our best guess.
And I guess I'm not understanding why it's $200,000 less than what we actually have in the bank right now. I know that 6
We
weeks
have a
away from
quarter's worth of
now.
expense to pay.
That is the beginning of the year. And that's why it's different. It's because there's been revenue transactions. Some of these revenue transactions have already been received. Some of these expenses have already been paid, but not all of them. So it's a timing difference.
Because you're basically calculating that from the year-to-date actuals and projections. I'm taking 1,117,107 minus 767.39, and that equals 350,068. And so because those are projections, that's one reason why it's not matching what's in that account right at this moment. Because this is part of May. Okay. Can we go on?
Okay, line 5.
On page
Shift session. Can't remember what the question was here. I'm sorry. Or additional budgeting for additional funds kind of go all in the STIF amendment. So that just shows this additional money being provided in the amendment, which would carry forward from the previous year. So I don't remember what the exact question was, but that just shows that amount.
So because that is more than our projection for the end of this year, that means you're expecting to get some money?
Yeah, that would be our expectation for how much money we're going to receive in that year. According to the STIP plan we have.
That includes the previous fiscal year 25, and it also includes the extra, like not quite 20% that we're supposed to have to cover.
That was the thing that kind of threw me off, because the number in the STIP plan doesn't align quite with what I was seeing here. But once in the last budget meeting, we talked about that 20%. So this includes that 20%. So it's not, it's the actual dollars we're going to get plus a margin of 20% so we can receive more money.
Yeah.
That is goofy, but that's the way that's how STIP works in here. That's how we're budgeting.
That's why I remember you guys on the board making a big deal about that we had to recognize that there was more money than what it appeared we were going to get. But we had to put it in there so that we could receive it.
Yes, and that's what this is. Okay, and then line 17. So page 17, line 66.
So before you go anywhere,
There's no line there.
on this same page, where you've got the requirements and say transfer lines 11 through 18, some of which are immaterial, but transfer, that means that the money is being transferred out of this account to another account, right?
What line are you talking about?
Well, let's just look at line 11.
What page?
Page 17.
Page 17, line 11. It says that you're transferring out $737,000 from this account. It's a requirement, so it's leaving this account. How can I see where it's going?
Yeah, I don't know. This question wasn't asked before, so I don't have an answer right now. I have to look. I'm not really sure what you're asking me.
Because you have to have a transfer in and a transfer out.
If you transfer out, you gotta have a transfer in. If you transfer in, you gotta have a transfer out.
What are you asking?
Where's, you have to have.
Excuse me, she's trying to answer the question.
Is where the transfer goes to. You see $1,533,774. You'll see that $1,533,000.
What line?
LB.
Her page is gonna be different. Will be 30, page 16.
Oh. I'm sorry. LB 20. I'm sorry. LB 20.
I'm sorry, I didn't hear that.
LB 20.
Okay.
14 line 9.
14, page 14.
Page and line what?
Page 19.
19.
19.
Line 19.
Nineteen?
That number.
The STIP formula fund.
Yeah.
And then the other portion is going to be further down in the debt service.
So theoretically, because I haven't done the math, if I take the transfer on lines 11, 12, and 14, they should add up and end up in the LB 20 on line 19. Is that true or not?
So the transfers actually add up to a little bit more, than this 1.533774. And that is because over the debt. And so I think that part of that transfer is in the debt area on the LB 30. It's covering some of that debt. But that is the,
But you would still need to recognize that as a resource in, even if paying the debt in.
right.
And you have it coming in so that you can then take it out under requirements. Requirement, debt service is that, and I don't see it. Oh, yes, I do. It's gonna be. It's gonna be line 57 of page 16 is actually debt service.
Yes. But remember that debt service isn't complete the way it is because we added amounts to it.
The problem with this is you're not having, it is not obvious when you transfer in and out that the amounts. If you have the same amounts of both in and out on separate, individual lines instead of throwing it into another amount, that'll be clear and you'll be able to see it. Whereas this way, how do we know that? I don't.
I would concur. We should make it more clear.
Would that be?
You could make it more clear. It makes sense to make it more clear. I mean, if you have a transfer out from here, it would be good to tell us where it's transferring out to, and then where you see it transferring in to tell us where it came from.
The same amounts.
I will say that these are the numbers that were provided to David and I. And I did not verify the transfers equal to transfers, the ins and the outs matched. So we can do something about that and make it a different transfer in and transfer out.
So I struggled with this too, because what happened was, as we were developing this, we were using the SIF plan amendment. That was created by our previous finance officer, and I don't know how many hours Betty and I spent going around with this, because I was befuddled, because they don't match. It's that 20% that we overinflate on the revenue side, and then this is an actual side. I don't know how you reconcile making up 20% more revenue.
It's not the number, David. It's not the 20%. It's I don't care what the number is. If you take it from here and you're going to put it over here, tell me where you put it. Tell me, correlate those two lines so I know this came from here or this went to here. It's not about the numbers. It's about where does it go?
Well, it is a bit of a.
Well, yeah, but not how much. It's we need to see that where if it leaves one bucket, what bucket did it go into? But you say transfer, you're changing buckets.
Okay. Kathleen?
Could you look at it that the resources are the in bucket and the requirements are the out bucket?
No.
We need to show it on the LB20 more clear that is where we're getting the money from.
Can you put the 20% in a separate line?
I wouldn't. It's not about the 20%. What they're doing is they're transferring money from the stiff fund to the general fund.
Mhm.
And then we have to see, where did it end up in general fund? We know it says district operations. We know it says match. We know it says ODOT loan principal, but where exactly did it end up?
So on
And-
LB 20, on LB 20, line 19 under the proposed budget, it should read 1,725,389. And that is the amount of all the transfers on the LB 20.
On which line? Line
Okay.
19?
I know, she needs to explain that a little bit more.
1 million.
Are you saying that on line 19, on page 14,
Thank you.
that it says 1.533774? Are you telling me that should, telling us that should be a different number?
Yes, it should
And
be
what is this new number?
1,725,389.
And that comes from
Those three.
those three
Transfers from
numbers
the 10.
that we've been talking about.
So,
Yes.
and where it says stiff formula fund, you could say transfer in.
Penny has her hand up.
Yes, Penny?
Thank you. I wanted to make a comment. I'm not asking a question. I just want to say that it is confusing to me in part of this discussion about what should appear in what way in this budget document, which is a plan, versus in monthly financial reports, which is dynamic, talking about within a period of time that money has moved or money is being not appropriated but authorized for expenditures if the revenue should be received for it. So I just want to say that I don't want an answer for it, but it complicates things for me as I'm listening.
Thank you. So if everyone would go back to page 14 and make sure that they have changed line 19 to 1,725,389. And I haven't done the math to know what the total would be. But that's
The total will be 6,958,427.
So,
Did everybody get that?
Yeah.
6,958,427. That's on line 25.
please say that number one more time.
6,958,427.
And so if the total resources is, then that's going to mean that when you get to line,
Go to the LB 30, line 67.
yeah,
That amount is going to change.
It's 16.
Line 67 will change to that amount right there, 1,278,572.
What page are you?
page 16, line 67.
And what is that amount? Because what you're starting to give us is the same amount that's on there. So
It was. This, please. 1 second.
For what?
7.
It should.
It should be 1,470,187.
Money,
Everybody got that?
Wait, 20%.
So the bottom line's going to equal the revenue.
So what does line 71 turn into?
6,958,427.
Kathleen's up here doing the math in her head.
Yeah.
Oh, maybe not her.
The 1,470,000 goes on what line?
187 goes on line 67.
Reserved for
You're
future.
getting all this, right?
Page 16, 67.
That changed
Okay.
this one.
So we have addressed where the money on the requirements on page 17, those 3 accounts show up in those areas we were just looking at. Numbers.
That is correct.
So that's from line 11, 12,
And 14.
and 14.
So the last one, page 16, not 17, line 66, shows the blank. And on the recording, it says, we're not sure what was done with reserves, not sure committee decided. That would be 62, the capital reserves, which are not, there's no balance for, and then 66, where there's no reserve for future expenditure. We haven't had that before, and I mean, 100,000 was there before, and I explained that already. On the other one, on the 66, we have not had a reserve there. Now, I guess the question is, do we want a reserve? We have a functional reserve, the 951,000 in a different account. We want to add another reserve for, I mean,
What are the requirements on that?
Can-
7,000.
Can Betty explain to us the difference between, in the definitions, between operating contingency, reserve for future expenditure? What is the difference?
Unappropriated.
Unappropriated.
No.
yeah.
And I know what unappropriated is. I mean, you can't touch it.
Think about a
What does it mean to be
contingency.
reserved?
Okay, wait a minute. We're talking over each other.
Betty?
Contingency as money you have in your checkbook, but you haven't said to your spouse that you could spend that money. So you have it there, but you haven't authorized them to spend it. And a reserve is like your savings account. It's like you have it in a separate account and you're reserving it for accumulating it for a house down payment. And your unappropriated fund balance is in your budget. If you have this budget and you decide that you want to make sure that you don't use all your income, you need to save some of it for a rainy day. That's an unappropriated fund balance. So the contingency is this pot of money that you have in your checking account that you could use if you needed to. And you can move it from one line item to another in your budget if you needed to in the middle of the year. If we had another a tsunami or a bad ice storm, and the board can approve using that fund on on more of an emergency basis. Have a little bit more with that. But a reserve is like you're trying to reserve up, you know you're going to have to replace all your computers at once, or some of your buses at once that you're not going to get funding for. So you want to start reserving some money for that. You want to put it in a savings account. So it can't be used. Those are the differences.
Certain type of requirements not allocated.
68 on page 16, the total requirements not allocated, which is 2.7 million. What is that? And that was a question.
Page 16, lines
2.87 million.
We've got down
2.7 for us.
2.705429.
Going to be up by 190.
Oh, that's the ones above it that are added in, right?
Yes.
Okay.
That's the total.
Okay.
Okay.
You scared me.
Yeah.
So because you
So
have,
that number needs to change. Yeah.
David,
Yes.
because you have 952,000 in the operating contingency, do you need a reserve fund for future expenditures?
That was my thinking was, they're both be restricted funds. Like redundant, and we have 952,000 in a fund.
Yeah.
Now, while we don't readily access it, or nor we use it like a contingency in a construction project or something like that, we're not using it.
Yeah.
It's a tsunami, or it's something that all of us is caught on fire, or something happened.
Like an emergency?
Yeah, and then we would, so, because our funding is not secure as maybe we would like it to be, there's uncertainty, there's the actual amount we're gonna get.
Yeah.
It's kind of weird, because, all this stuff is, we're calculating how much we expect to receive, and there's no real way to ensure that. So having extra money in reserve didn't make sense to me at the time, and you could see we hadn't been doing that. So I didn't
See that
want
they
to.
did 500,000.
They
or
did.
no, 125,000.
Yeah,
And then 221,000 and
I think they had the money to do it, or they had
money?
something, they had planned to do that. I don't have a plan to do anything like that. Now, that's the other thing I would say. We don't have a transportation plan yet. We don't have a capital replacement plan. We have somewhat one, but not a fully thought out one. We haven't developed those plans and processes yet. This is the foundation. If we're building this, we're going to try to go from here. This is not perfect. I said that at the beginning. It's 95%. There's stuff here and here that I would like to see better. But we need to have a budget. It needs to be fundamentally sound. We move forward with it. I think there's comments that are made that really will be reflected on in our next. It's just for this one. We have a consultant that's done a great job bringing us to this point. We don't have a finance officer working on it. We have me. I apologize if I can't carry the water any more than I have, but I think this is our best budget and our best at this time. And this is going to get us through and create what I think is a foundation of honesty and transparency. We'll be able to move forward with this knowing that we can trust these numbers. I've seen these numbers. I see these numbers when I'm sleeping. This was it the 1 point.
So
There's one number that just resonated in my head for like days because we get that 183883842. We had that discussion ad nauseum. So what I would suggest to close this out is that we have not identified it as a reserve. There's no intent to propose it as a reserve. And I just wanted to clarify at this point if there was any other desire to add a reserve of any kind beyond what we already have.
So the district doesn't need a reserve for future expenditures.
We need it, but we haven't identified what for.
Oh.
I mean, and like I said, with the buses, we're going to need money for that, but I don't know when.
it's 2 or 3 years down the road.
It could be, yeah. And so I just really am not comfortable stashing away a couple $100,000.
Yeah.
For now, and there's no reason to do so.
Okay,
So, and I'm not gonna make an argument for that, but what you need to remember, if you're looking at this, is that we just increased the unappropriated ending balance by around $200,000. And an unappropriated ending balance is kind of like having a CD. You can't touch it until it matures, which is the following fiscal year. And we need to do that knowingly that we're doing that. Do you want that $200,000 in that unappropriated ending balance, or do you want it somewhere else?
I think my understanding of that balance is, because this is the plan, it's the projection. If we ran into some extraordinary circumstance where we had to spend money on something, we could use that.
With board approval.
Yeah, you'd have to call it board banks.
And maybe.
And the budget committee.
We would have to do an amended budget,
Yes.
some catastrophic thing or whatever, we have to do an amended budget. Anyway, so
You just want to do this knowingly. That's all.
yeah, you know what, I really like this. But I'm just not well versed enough to say, let's go ahead and put another $250,000 over here and just in case. And I'll be honest with you, full disclosure, every project I've worked on, capital project, whatever, I've done that. I put the money over here. You're always gonna need it. But here, the margins are so thin, I mean, we're missing 3 zeros from each one of these columns.
Yeah.
Right? So a couple of, $30,000 is.
Can I find you another 100 since we're on that topic?
Sure.
On page 20, that $100,000 needs to be shifted over to 24-25. And then that 100 needs to be carried forward on the unappropriated and fund balance into the catch on band on this year's, and then drop to the unappropriated fund balance on this year. That would
So
be
it
another
was,
100,000.
it was adopted in the budget, but it hasn't been spent.
That's still sitting there, though.
Yes. I mean, you would think it would.
It doesn't have actual money.
Does that make
Is
sense?
that making
What
sense?
else? What else would it be? I guess.
I don't know. I always have felt that there's not always actual money that relates to budget documents.
Hold on, I was asking Betty, because Betty and I have talked about this ad nauseum. So.
We really, I don't feel comfortable adding it to any budget or any unappropriated line because we really don't know. Is that really there? Is it real? Do we have a reserve? I don't know the answer to these questions. So that's why we didn't do anything with it.
How do you find out?
For me, reality is looking at the bank accounts and adding it up, which I did this morning. That's reality to me.
Do we have the?
But they don't always match what the budget says.
Well, that tells me how much money we have today, right this minute.
I think when I was talking about the 95%, there were things that are in this that we could not ascertain.
Oh, yeah.
I'm not going to be able to do a forensic deep dive into everything because of the time. There are inconsistencies and incongruities that I'm just trying to get this close, and trying to be conservative. Zach, some of your comments I really want to follow up with because I think there's a lot of things that I need to understand better, but for the sake of what we're doing here, we identify 100,000. Is it real? To me, when we talked about this before, we were not sure because we couldn't identify and count that. And it's just like your point.
It was theoretically real last year. But
Just,
who knows?
there were things that happened here that I just can't. I can't comment on it, but I mean, there's just things that we want to make sure we don't repeat. So
I would footnote this specifically then, because what's going to happen is someone in the future is going to look at this and go, "You're missing 100, right? So where did that go?" What I mean? So
Good idea.
yeah, you can at least say there's
and I think
a varying degree of uncertainty around this 100 grand.
I think what we need to do is, get that kind of that CPA type level I don't know what to call it, deep dive or collage.
Forensic analyst.
Whatever.
budget.
And we did a forensic audit, and that was a high level, and it was okay. But just some of the things at the budget level where it's in the nitty gritty, you know, and you made some really good points on the transfers, and there's some other things just akin to that I'd like to see where that money goes and how it goes. But in this budget, we're not able to ascertain that level without, you know, I could spend 6 months on it and probably come up with a good idea. But I mean, I'm just really slow. I could hire someone and make it by the month. But I think for where we are today, I agree. We footnote this, and we
Can I ask an operational question?
sure.
When you're filling out this form, does it have the built-in formulas? Does it add up for you? You have to do everything manually and then transcribe it? It doesn't
There's not.
do the, it
No,
doesn't
no.
add anything up for you.
It's not a formula. You know, it's kind of
So when you're asking, the actual form from Oregon does not have formulas in it. And I converted this into an Excel spreadsheet, and the reason why you're seeing spaces is because with no data in it is because I loaded up 22 and 21 because we had those available so that we could look and see whether we were being right or whether we were being reasonable by looking at the prior 2 or 3 years of actuals instead of just 1 or 2 years of actual. So, and then added formulas to those.
And just about the only thing you can trust in those numbers is the actuals, not the budget. One thing that isn't there, and that is if you look at the LB 20, page 14, the year-to-date actuals through March, the first 9 months. We should have had that number. We knew what our actuals were at the end of March.
Which lines are you talking about?
Line one.
Okay, that's the cash net working capital,
Mm-hmm.
contingency reserve beginning.
We would, yeah. And the contingency reserve.
I debated with myself on whether to put that on there. And
I'm sorry.
I decided not to put it on there because I thought it would confuse you guys if you had 2 different cash amounts and you were asking me, why are there 2 different cash amounts? What's really funny is I listened to your and read the minutes from the prior budget committee meetings last year. And it was said that you wanted them to at least be dated because it just said projections and it didn't say anything. So I wanted to tell you guys it was year-to-date actuals through March and projections. And that seemed to not go over very well at the last meeting because I also listened to that. So I thought it would be easier not to confuse you with that number in March. But I wasn't 100% sure I had it right, to be honest, either.
But the bottom line is we have the year-to-date actuals and projections. So we have that.
Okay. I guess if we're not sure what the year-to-date actual in March was, how can we compute a year-to-date actual plus a projection?
I was just given 2 sets of numbers. And so I decided just not to, I could put in what was reported to you at the last board meeting through March, but I just decided not to do it.
Pamela?
Okay, this is an overall comment. The column actuals and projections are contradictory of each other. So what is the point of the figure?
In terms of the one that says March,
No, just in general. This is in general. I don't even look at that because it doesn't make sense to me.
Your March one is what have you spent from July 1st to March 30th.
Okay.
And then that doesn't really tell you how much you're going to spend in that category for the whole year. So that's where you take what you projected in through March and add what you're going to spend in the next 3 months, April, May, and June, for the full year. And that reflects, in my mind, that's the important number, because that's what you compare to what had been your adopted budget the previous year. Because maybe in your payments up to March, just going to say, for example, maybe you don't pay the insurance on the buses until April. And so you might have zero in that line. I'm making this up. Zero in that line up to March. But then in April, you're paying $100,000 for insurance. So you need that second column that says, what is it for the whole year? And that's a projection, because when you put the budget together, you don't absolutely know for sure on some of the insurance you do. But on other things, you don't know for sure, like how many things are going to break down on the bus. That's a projection.
I think the issue though is the actual plus projections, not actual and projections. Yes.
Year-to-date actual
Plus projections. Plus projections.
So that the separate figures. I mean, how do you know which actual?
The header could be just year-to-date projections.
For us.
And then it includes the actuals that were presented in up
It
to
wouldn't
March.
be a year-to-date projection. Year-to-date means it's actual.
Yeah.
What this phrase is year-to-date actuals is a phrase plus the projections.
Okay, so just take out that top line that says year-to-date actuals and just call it projections, 25, 26.
Yeah.
Okay, I think that's a fair, so we can
And
look at it.
Okay.
But that's where it's important to know your actuals actually, because you want to know what have we actually spent up to.
Right, and we've got that in the previous column.
But we don't for our
Oh,
cash
I see what
and
you've done.
working capital.
So the year-to-date, or not year-to-date, the projections for 25, 26 include what those actuals were, likely, and then it projects it for the rest of the year.
So why can't you have actuals and then a projections?
I want it to be totaled. I don't want that total. I don't want a 3-column.
No, you have your actuals and then you have your full year projection.
Right.
But it's the actual in the projections.
Yes. That's why she wrote actuals and projections, because it includes, like on the third one down, it says previous levied taxes. It includes the 25,000 includes the 19,000 that had been received as of March.
In this case,
it's not more money. It's not twice. You don't add those two
your
together.
actuals are 9 months. The next column is those 9 months plus what you think you're going to spend in the next 3 months.
See.
Okay, got it. Thank you.
Yeah. And year-to-date actuals and projections plus projections and plus kind of change. When I was growing up, yes, what is 1 and 2?
You can just say
1 and 2 totals 3.
So do we want to keep the column the way it is, or just make it projections, eliminate the?
no. I want that column.
No, we're keeping the column. We're just talking about, do we change the phrasing on it? And to be honest, I would like to keep it what it is now, so that we don't have to make that change.
Yeah, I agree.
Okay.
So we have gone through this budget with a fine-tooth comb. Our role as a budget committee is not to make a final budget determination. Our role is to make a recommendation to the commission for them to make, Board of Commissioners, for them to then adopt the budget by June 30th. Because if they don't get to spend any money on July 1st. Very important dates. I'm sure you'll be doing it long before June 30th. I'm part of another organization that did it on June 29th, which is really kind of close. So we have made a number of changes. And I would Before we go through those specific changes, as we look at making a motion to forward this to the Board of Commissioners for that we recommend this budget to the Board of Commissioners, any other things that we should be considering for this budget before we recommend it to the Board of Commissioners? Pamela, you're.
Yeah, I'll tell you.
Okay.
Okay, so I'm reading this, blah, blah, and then coming here, discussion. So the thought occurred to me, due to history and issues, to perhaps hire someone to do like a quarterly report, CPA. The audit in the past has been so late that it's useless. The other thing is they have all these caveats that they're not covering, so they don't get into the nitty gritty. And if there are issues, we have the time, not the time, we can correct them then instead of a year from now. And there would be someone who can give us consistency if there's different personnel on any level.
And this would be an action for the Board of Commissioners to take, not for this budget committee to.
So that wouldn't, in terms of allocating money, no?
No. I don't think
Okay.
so.
We can request that it be added to professional services at CPA cost
Right.
to do forensic.
Mm-hmm.
I don't know, David.
I think there's adequate money to do that, and in my forefront of my mind. The longer
There's a
I've been here.
contingency.
Do that quarterly, it's gonna cost a lot.
Yeah, I think,
Maybe-
with my intent, Pamela, what I would propose is that we look at what it would take to have a CPA come in on a one-time, come in, get everything secure, and get a file, and just really kind of do a deep dive and making sure this is done in a way that we can repeat, right? If we have them come in all the time, we would basically not need a finance officer,
Yeah.
and we would contract with a CPA to do the work. Now, either of those scenarios can work for us. It's just in the one where you contract is way more expensive than the one where we can just get the foundational work done. So I think it's a great idea. I'm fully supportive of it. I think what we need to do is, what I'm asking for now is let's get the budget approved and get moving on that. And then I can get a proposal for CPA to come in and do that work. I think we started to do that when we wanted a CPA to be the budget officer, and we did an RFP, and that was, you got me. This is what you did.
And that's something that the Board of Commissioners, because there is money in the operations as well as in that contingency to cover those expenses. So the Board of Commissioners, that would be something that you all would have as part of your discussions. So, Tita?
So first, I would want to make sure that everybody here looks at item number 8 on page 3 and make sure that all of those questions that are listed you feel have been answered. Secondly, there was discussion at our last meeting about moving some money out of the contingency fund and putting it into operation requirements. And now that you're talking about some sort of audit kind of thing, maybe that's a reason to put it in there. But there was talk about turning that contingency fund to an even 800,000 or 850,000, and we left that discussion. And finally, I do want to go back to.
I think that public capital reserve.
No, that wasn't from the capital reserve. That was from the contingents.
No, from the contingency to the capital.
No, capital has to be for capital items.
Okay, so I would like to ask that we are at the point in this process where we need to make things be a motion and then have a second and then have discussion, because if we're going to make any changes to this budget, that needs to happen. We can't just have one person say, oh, sure, because maybe the rest of us don't feel that way. And so there's not going to be any changes other than what we've made as corrections to this without a vote of the budget committee. And so
I will make a motion to move $100,000 out of the contingency and put it into.
Can you give me a line?
I'm looking for the line right now. To put it into the
Page 14, line 2.
I don't know if it's line 2. Page 14. Oh yes. And go out and go for that. Line 2 is contingency. My motion is to reduce the contingency. No, that's not to reduce the contingency. All right. My motion is to add $100,000 on line page 15, line 32.
So you want to go from
Professional services from contingency. So reduce contingency in line 2 to $852,001 and add. Can't reduce it and then add it to the requirement figure.
That line already had gone up from 10,000 to 100,000.
There is a number of projects in there, including a CPA audit included in that one.
in the professional services
The professional
Number
services,
32.
which is why is it so much larger?
for your 100,000
Yeah, 'cause
proposed.
we experienced, we hired consultants for several things, 3 or 4 things that were 5,000 here, 10,000 here, and all that. And so, because where we are emerging from the challenges we have, I went from a $15,000 to 100,000, knowing that we would need accounting assistance. Knowing we would need IT assistance, knowing we would need legal assistance. And so this is an extraordinary amount, and I think that would cover those types of things. I mean, it may not be, I mean, I didn't have any proposals or any plans drafted at this point. So this is just it's a place, but it's a pretty significant amount of
It
money.
gives the flexibility for the Board of Commissioners and for you
Yes,
to get that professional expertise that we were talking about.
Okay, I know what the motion is that I'm on. My motion is to, I'm going to say, add $52,000 to page 15, line 32. At $52,000 there, which would increase line 39 by 52,000. And then it's going to decrease line 65 by 52,000.
Next page.
Page 16, line 65. Is that, Zach, I'm on the right track?
But Peter,
Mm-hmm.
you'll also have to move the $52,000 out of the contingency balance into the working capital balance. Because you got to take it out of there, up in your assets, up in your resources. Same 52,000, you've got to take it out of that contingency reserve and put it into your working capital.
Okay, so you got to tell me the line numbers.
1 and 2. On page 14.
Okay, I see what you're saying.
Okay.
All right, let's rephrase this.
Can I ask you what that 52,000 is for?
That 52,000 is for both the audit CPA needs that we might have, and it's also for a contract in case we need it for someone to do public relations. It's a contract. It's not a permanent position. It does not add to FTE.
I suppose if we're gonna do that, we take the 5,000 that you were gonna put in advertising and add it to that 52. So add 57.
Wait,
Can
I haven't finished my
Oh,
motion.
sorry.
Yeah.
Sorry.
I would like to make it as clear as possible. And remember that there are some flexibilities in terms of everything within a section of the budget. So if he needed that $5,000 to pay for it, it would be, he could do that.
Okay, we don't need to make an
No,
adjustment. on that.
no,
Okay,
we don't need to
never mind.
move it within
Sorry.
the same materials and
All
services.
right. So Zach, you make sure I'm saying the right things, all right? And Kathleen as well. All right. So my motion is to increase working capital by 52,000, decrease line that working capital is line 1, decrease line 2 contingency by 52,000. And then on page 15, increase line 32 by 52,000, which increases line 39 by 52,000, and decreases on page 16 line 65 by 52,000.
52,000?
Correct.
It's 50,000, but you upped it to 52.
Well, I wanted to make it a round number. Basically, I want to make that 900,000, but it's coming out to 900,001. So 52,000. Somebody has to second that motion in
But
order.
I just want to make sure that we're clear in what this first motion is. The concept of the motion, the overall concept, besides all this detail, is that this would put more money into professional services to be utilized, perhaps for additional financial CPA assistance as we are working through this year's budget and as we develop next year's budget. And perhaps PR/marketing/advertising, whatever the heck you want to use for the right word, to get the word out about how wonderful the agency is and to get more writers and support. And you can use any of those 3 words in different formats to say that.
You got the concept right.
Okay.
On the button.
And then the detail
is
It's recorded.
It's recorded. It's recorded. We're moving from one line to another, and we've added them all up, and they're all correct. So is there a second to this motion?
I'll second.
Seconded by Zach. Okay, what about discussion for this? Emma?
I think that where we are, where Sunset is now, we have lost fruits. If we're going to, in public relations, there are places people can't get to now, and it's more important to spend money on getting to places that we can't get to now. If we could get more micro transit, we could do more to get people to where they're going at less expense. What can happen now if you go and do all this publicity and then they go, well, which has happened in the community, I can't get to where I'm going, or I can't get there on time, or I have to leave an hour early. And I strongly oppose taking money from contingency at this point when you have unknown federal and state money? You have fuel expenses that who knows where they're going to go. So I strongly oppose it.
Any other comments?
So, you have already planned in, David, for the $100,000, you've already planned in CPA, correct?
There is some amount of money that would be used for that. I've not identified it because I have not solicited any proposals.
Okay.
And I don't know what the market for CPAs is. We have other work we have to do. We've drafted a strategic plan that gives us guidance on what we're going to do. We've identified the top 6 things we're going to do, and I'm trying to align the spending on that.
So can we make an amendment down the road if you need more money for a CPA to add to the budget? Is that possible?
I think the way the contingency is designed to work is that if we needed to draw on the contingency for a specific urgent need, that would be, we'd have to define what that need was.
Yeah.
And then we would have to go to the board would have to say, we want to do this. So I guess my comment would be, maybe that this is not the place to spend the contingency money. Maybe the contingency money should be decided at the board and at the board level and in a board meeting. This is a budget meeting to where we're just trying to develop a plan for spending. Doing a $52,000 amendment now gives us room to make that decision. But the decision hasn't been made. So are we putting the cart in front of the horse or not? I don't know. And this is new to me, and I'm just trying to understand that.
Board of Commissioners, many of whom are in the room, are hearing this discussion. They would have the ability to, like what David said, is to do that by taking it out of the existing contingency fund with some effort to do it. But sometimes it's always good to make you have a little bit of effort before you take money out of your savings accounts to do those things. And there's already a fair amount of money in there that would cover your CPA activity and such. Any other comments? I appreciate Pamela's comments. Tia.
I have a question.
Oh, sorry. Penny.
This is a procedural question. So you're taking individual motions now about parts of this budget rather than what I thought you were going to do is do a motion for the whole budget and then take amendments in detail, but you're doing details first, is that right? So this is not about the whole budget, this is just about this one proposal.
Exactly. We're deciding whether these proposals, which I don't know if they'll have more, that we should put into the budget as a whole, and then at the end, we will then vote on recommending the modified budget to the board, because it has a lot of modifications in it already, and this would be another modification. So yes, I am taking those first so that we're not revising our motion to send this to the board. That's a single motion. It's the last thing we do before we walk out the door.
Okay, so I have another comment if I can make it then. I think that we should look at the contingency as a policy matter, that we, the board, and make a decision then about how much we want that to be a savings account, how much of it we want to be emergency spending, those kinds of things, rather than dipping into it now.
Okay. Thank you, Penny. I appreciate that. Any other comments? Tia?
One of the thoughts that has been brought up is that our that we don't have the routes that we need, we can't just start a new route. We can't just say, oh, we have some money here, we're going to start a new route. That all has to get approved and go up the chain further than us. So there's just because you have money, you can't just start something.
And I don't think that's what Pamela was saying. I was thinking, because, and I'm going to make a comment, and probably as chair I shouldn't, but I've been in a lot of organizations that one of the things sometimes you have to be careful of if you're going to do a marketing plan is that you are not overpromising the public,
but you
is
haven't let
something
me.
that you can't complete. So, I mean,
okay. So to keep going with where I was going, it's not about marketing. Public relations and marketing are two different things. This organization, this agency needs its reputation worked on. Needs to work on acceptance, needs to work on trust, needs to work on its public image. And that's what public relations that I'm referring to is about. Don't do it in a vacuum. We don't do it individually. You got to have a plan for that. And you don't do it by sporadically sending out an ad or sporadically sending out a press release, etc. So that's what public relations is about. And that's where I was looking.
Kathleen.
I would like to know this item, this budget item, professional services, has been raised to $85,000 since from this current budget. In that $85,000 that you raised, had you considered money for a CPA? Like substantial money? I mean, is there anything else that accounts for that $85,000?
There's a number of, we have all of our planning's outdated. So we need to have all these new plans. And so which ones they will be has been, we kind of pushed that through with our TAC committee and identified plans that we were going to move forward.
Mm-hmm.
We have put in a grant application to get money in the next biennium for planning as well. So we expect this to be a 3-year process. Some of it's pretty comprehensive. Some of it's just safety, capital replacement, things like that. So the cornerstone in my mind for our operation is first and foremost is our finance.
So you have that
there
in
is
mind.
money in there. I don't know what it's going to be. Is it going to be $5,000? It's going to be $50,000. I don't know. So all I can do is try to my plan is to do an initial one, a small amount and get an assessment. They'll come back and say, you need to do all this stuff. Or they're going to come back to me and say, oh, no, you're good. And then I over budget. But at this point, I have my gut telling me that there are things we need to look at. But I'm not a finance person. I have consultant help, and I may need more consultant help. So it's become apparent to me that if I'm doing this, I'm going to need all the help I can get. So that's a basis for this. But it's not just that. I mean, we have so many gaps to fill. Public relations is a big gap. But we have risk management, we have safety, we have maintenance, we have all these fundamental pieces that don't have fundamental plans. And so my personal preference is to start at the beginning. We're going to have our finance.
Finance.
Then we're going to get our operations plan. Then we're going to get our safety plan. We just have to do our homework. We have to do our groundwork. I would love to have a PR campaign. I'd love to be able to do more marketing. I'd love to do more outreach. It's just not, in my mind, the top of the list right now. Top of the list right now is finance and make sure we can operate. We have to do things for our drivers. We have to do things for our drivers. It is the number one challenge for us to keep and retain drivers. Whether it's our benefits, it's whatever we do the salary survey. We do all these things. We have to do our homework. We have to do our legwork. A lot of it we can do in-house, but this will give us the flexibility to do all those things. And I would even say that there is an opportunity to look at how we're going to approach public relations. But right now, there's 28 of us. You know, we're tasked with, I have my mobility manager recording the meetings and doing IT. I have my COO doing everything. You know, we have an executive assistant that's supposed to be doing marketing. It has had no bandwidth to do that. And we have to look at these things and decide where our priorities are, and we need a strategic plan to help do that. And we're going to move forward, but we need to be deliberate, willful, and plan that. So that's why there's a kind of a disproportionate amount of planning, because we're going to need to be have that deliberateness.
Can I follow up on Kathleen's question? So of the 100,000, I don't expect you obviously to have perfect numbers, right? But ballpark, if let's say you hired a CPA to come in and look at this, and you spent the initial small amount, what amount would you? And then they came back and said it's going to be X amount to look to fix your books. What amount would you be comfortable with spending next year of that $100,000 on?
Me, job one is finance. So if I have $100,000 in all these different plans, and I needed $100,000 to fix it, then I'd have to spend $100,000. But my desire is to spend, $10,000 on this, $10,000 on that, $20,000 on that. But
That's
if we don't get our finances in order,
My biggest concern is
we're never going to get past it. We're never going to. We won't need a PR for them because we'll never have the trust of the community. If we can't get our ducks in a row, make sure. I should be able to look at this with 100% confidence every time. I should know we're accountable for every nickel. I should know where it's all going. Not there yet, but we can get there. Like I said, if I have to spend all of it to get there, that to me is our number one goal.
Alan?
I also want to mention, in terms of, we still owe 300 and some odd thousand, whatever the figure is, for the ODOT loan. I don't think we're at the place to have PR, because we want to get the loan paid. We want to show people that the finances are good, that the operations that exist now have all that they need, and those are the priorities. I mean, I would like to see more done, but it's not the right time for it.
Pamela, what I would say is that if we wait for the right time, we're going to never get there. So the idea of having that $5,000 stashed away over here was that seed money. We can start something.
That's okay. 5,000. Okay.
Well, no, I'm just telling you, we can't do everything all at once. We're trying that, and it's not working.
Okay.
Right. So, but we have a little bit here. We have money in here that we can draw from if we need more. Again, the number one priority is finance. We got to get our stuff in order. If that takes all of our money, it will. But if we can't, but that doesn't mean we can't spend $5,000 over here or $10,000 over there. I can bring Ocean in here and they can help us with our safety plan. I can do all these things. Yeah. I can't do it all at once. And I need help to do that. So
I'm going to throw in one thing because I think Tita makes a good point. This agency has had a challenge with its image with other governments and the public in general. But I think if we are getting our finances in order, we're getting our buses working, we're able to retain staff. We can do some internal things to get that word out. Those are kind of reports that maybe are made to the city councils, to Facebook pages and such that say, you know, we got a good rating on our budget or whatever those various and sundry things can be. That can help rebuild confidence. Because I do agree with you, Tita, that image is different than marketing, because image is not necessarily to get more writers, because it doesn't necessarily go to your writers. City council members in Seaside aren't necessarily bus riders, or Astoria or Cannon Beach. But they are part of the group of people that want good transportation service for their communities. And so they need to be confident that this group can provide that good transportation service. And I think, Tita, that's the image that you're talking about that needs to happen. And I think that we're not ready to do it with a full-fledged effort, but I think as this year goes on and we get our finances better, you get some bus drivers that are going to stick around because you give them new seats, that we can move towards that and maybe have more of a formal effort of that. Yeah. I know I'm not supposed to say that as a chair, but I'm doing it anyway. Yes.
I'd like to move to call the question.
Okay, we have a call for the question. And I'm just going to do it as the concept of moving $52,000 into the professional services line for image and CPA. Additional for CPA, because there is already money in there for CPA. So all those in favor, let's do a roll call vote.
Okay. Commissioner Allegro?
No.
Member Dieter?
Are you saying me? Yes.
No.
Member Fleck?
Yes.
Member Griffith?
No.
Commissioner Chair Klezak?
She's currently not on. She's off.
Oh, okay. Maybe we'll come back to her. Okay. Moving on. Member Lansing is not here. He's absent. Commissioner Montero?
Yes.
Member Never?
No.
Commissioner Romero?
Yes.
Stolberg is absent. Commissioner Teeple?
No.
Commissioner York?
No.
And Member Wilson? Motion does not pass.
Thank you. Good discussion. And I think the concept is still a very good one. And image, I'm hoping that we can do some improvements to the image with the direction that we're going. Are there any other motions? Yes, Zach.
I would motion on page 17, line 25, that we add $350,068 to the unappropriated income balance on that line to make resources equal requirements.
Okay, let's go back again. Page 17.
Page 17, line 25.
Line 25. And what are we doing?
Adding the $350,000, $68 from line 2, cash on hand on this next budget, to that ending unappropriated ending fund balance.
On line 25?
Yep.
And you're saying that it's just a matter of
Otherwise, that 350 in my
otherwise accounting.
otherwise that 350,000 appears up there.
Yeah.
I second the motion.
Okay, it's been moved and seconded. That would also increase that.
It would make those two lines. It would make it would increase 26 to equal 1,117,107. So then resources would equal requirements.
I'm sorry, what is the figure again?
Line 26.
So line 26 would then increase to 1,117,000.
Not 100. No, 800. 83,000.
Right. How about 2
Has to
million?
equal the resources.
Right, right.
Are you looking at similar?
Isn't it?
Oh, no,
this one?
the new total.
He's saying that
No,
this number should be.
So this number here should equal this number here. So if we add the 350 there, then this number is now that number.
So we have.
Okay, I'm
Yes.
confused.
This here.
And to
And add it here. Yes.
Okay, don't just say added here. The rest
Sorry.
of us are confused. as
Sorry.
well.
Okay. Let me rephrase that.
Yeah, start from the
The
beginning.
350,000 in
That's
Yeah.
proposed by budget officer cash on hand,
line 2.
line 2 on page 17.
And
I
that
want to
stays right
add,
where it is?
it stays,
Okay.
it's not affected.
Okay,
What I want to do is add that to year-to-date actuals and projections, line 25,
okay,
that same $350,000.
okay.
That will then increase your total requirements to $1,117,107 and make those two items equal.
Okay, what happens to line
will second
26?
that.
Line 26 is just increased by 350,000.
And where is the 1,117,000?
Line 8.
So
So make line 8 and line 26 equal.
Correct. And you do that by
And the
adding
year-to-date
$350,068
to the 700.
to line 25.
And then.
Is
you
that also not true for the proposed budget down on the unappropriated fund balance? Because line 8 right now and 26 don't equal each other.
Yeah, something.
Okay, I don't understand that because if you're adding 350 on line 25, then the number below it, which is the total of everything there, should add 350,000. So it should be 2 million something.
No.
No.
Wrong call. So in the year-to-date projected and actuals, that's where that would be.
Okay.
And that is,
Okay.
that's true for that column, and it is true for the proposed by budget officer.
No, that-
Is it not?
Yes, that number needs to be different though.
Yeah, it does.
So that,
Excuse me,
so
didn't Betty say there was a reason that it should not be? Because it was a
We have-
special fund?
we're gonna hand up and then I'd like Betty to
Yes.
Resources.
weigh in.
Penny?
Penny?
Were you going to call for a second before you take discussion? That wasn't what I was
We
doing.
haven't got it figured out yet. Yeah, but we haven't got it figured out yet. Exactly what he's doing, what he's recommending. So we'll take discussion as soon as we figure out what it is.
Well,
Okay, and-
I'll withdraw until there's been a
Yeah.
motion
Gotcha.
on the floor that's been seconded.
There is a motion on the floor that's been seconded, but the explanation of what that motion is still trying to be worked out.
Well, then there
So,
isn't really a motion on the table.
well, there is, but the rest of us are trying to understand the motion. That's the issue.
And maybe Betty can look at the map.
Yeah.
So the issue is that I see is that you're thinking that your ending fund balance and your beginning fund balance are going to be the same as your unappropriated fund balance. And that is not necessarily the case. And so what I'm saying is you can put it there if you want, but that may not be what we really anticipate as being the unappropriated fund balance. There might be some delay in payment and things like that, or there might be some adjustments in the fund balance. I don't know. When I was given this by the person who was doing it, they said that there was going to be nothing there. And when it comes to the proposed budget, we are proposing that we're using up all of the resources, and that there's going to be unappropriated items. So I'm not really sure what you want other than that. So the assumption is with this proposal that that ending cash balance of 350,068 is going to be the unappropriated ending fund balance.
Yes, what I would like is for the resources to equal requirements.
Yeah.
In both
Yeah.
year-to-date actuals and projections and proposed by budget officer. And you do that by adding to the unappropriated funding balance, because you can't have no money at 1159 and have $350,000 at 1201. That doesn't make any sense.
Budget or year to date?
Oh no, I'm sorry. I'm in the first column to the left,
Year to date.
the year-to-date projections and actuals and projections, and then over here, the proposed by budget officer. I can get past this over here, but I want for this year and next year to be correct.
Okay, so remind me exactly where you're moving 350,000 to. What line and what column?
It's not so much moving as added. So
Okay,
year-to-date actuals and projections, line 25.
so previous year, current year, you're
Yes.
adding 350,068, and the total would be the one.
Correct.
Wow.
That would by default increase that number below it.
Okay,
Which would then mean that your requirements equals your resources, which is you have to do.
Correct.
And then
Remember, this is not actuals. Actuals and projections, you do not have to have your requirements equal your resources. That's what you think is going to happen.
Right.
but
But if you start with 242 and you don't spend 242, that drops to the bottom line. So I understand what you're saying, but you can't invent $350,000.
okay,
Again-
I'm gonna open it for discussion, and go ahead and finish, Betty.
I'm just saying it's cash is different than unappropriated fund balance. And I don't know what the unappropriated fund balance estimate is, but we could use the cash balance. So you can do that. No problem.
I'm gonna ask Penny, who's patiently waiting.
Well, I was going to ask Betty and David to respond to, do you see any concerns about this proposal? That's to each Betty and to David.
I don't see any concerns. I will tell you that it looks like I made a small mistake on the same form that the resources and requirements should balance to 1,883,842. So I've made that correction. It would mean that line 23 of the proposed budget would change from 110,261. That
How
number
much?
really should be 158,453.
Betty, is that after you change the ODOT stiff number to the 1,725,000?
No, it's when I changed the 350,000 cash balance.
Because we also on line 5, we changed ODOT to the stiff to 1,725,389.
we did.
Kathleen, no, that was
No,
on this
No, that was a
No.
different one.
That's a
That
different
was-
form. No,
That was one down there too.
So right, that's always been there. That 1.7 million.
Yeah, you didn't want to put that up there?
No, we changed that on the general fund income form. So the
So you wouldn't
resources.
know it there then too.
No,
Uh-uh.
because that 1.5 million is what you expect to receive next year.
Okay. So then line 23 on proposed by budget officer, you're saying it should be 61,000?
No,
Line 23 on the proposed by the budget officer should be 158,453. So that the total is 1,883,842. And that matches your total resources.
So line 23, under proposed for budget officer is 158,453.
Correct?
Okay. And the total is now on line 26, 1.883,842.
Correct.
Okay. And that the other one that we're going to vote on in a moment is that in the actuals and projections for 25-26, line 25 has 350,068 added or put in there. And line 26 again in the projections for 25-26 is now 1,117,107. Is that yes? Very much everybody. Okay. Are we ready to vote?
Debbie, does that sound?
No. I
That's
had a
okay?
second part to my question. I asked Betty if she would speak about whether she had any concerns, and I also asked David to speak if he has any concerns.
I think he turned his over to Betty.
Yeah.
Okay.
Okay, are
Okay.
we ready for a roll call vote? So,
Commissioner Alegria,
yes.
Member Eder,
Yes.
Member Fleck,
Yes.
Member Chair, Budget Chair Griffith, sorry.
yes. Who am I?
Board Commissioner Chair Plezek,
She's not on.
Lansing is absent. Commissioner Montero.
Yes.
Member Niebuhr,
Yes.
Commissioner Romero.
Yes.
Berg is absent. Commissioner Teagle,
Yes.
Commissioner York,
Yes.
and Member Wilson.
Yes.
Motion passes.
Thank you. All right. Is there any other modifications to the budget that we are looking at recommending to the Board of Commissioners that we haven't already adopted as we kind of went through the process, the changes and corrections and such? Are we?
That's just a minor error in the org chart. The transportation specialist should be 2, and bus drivers should be 8.
Well, we're not approving that part.
Okay.
We're approving the LD.
Okay,
boards,
yeah, we
right?
go.
Now that we're stepping our bounds on this.
All right.
Okay, so I would entertain a motion to, and I'm just going to throw it out as what the concept would be unless somebody else wants to figure out what it would be, that the budget committee recommends the budget as modified by the budget committee today.
I motion that we recommend the budget to the Board of Commissioners as modified today.
It was second. Okay, any discussion before we move forward? Tina?
we have made so many changes and we have discovered a variety of mathematical errors. I am not willing to rely on my memory or minutes that say this has changed, this has changed. I want to see a fresh, updated copy of this for me to make sure that it is everything that I think is correct. So I would not be in favor of recommending this at this time.
Okay.
I would like to rescind my motion then.
That is probably going to require another budget committee meeting. And I will not be here, not to say that I have to be here, but I will not be here at the next regularly scheduled budget committee.
So
So,
I just sent a revised budget document to David. If you guys want to look at it with all the revisions that you just suggested.
yes, Karen.
Are there on a timeline? Doesn't this have to be done by?
We had a third budget committee meeting established for June 12th. I will be in Ashland watching my great niece graduate from college. Since I paid for a bunch of it, I definitely want to go. And so I will not be here. Not to say that you can't have another meeting or move the meeting or something like that. And the Board of Commissioners, well, you have rescinded your second.
Yeah.
Okay, is there another second?
No, I made the motion.
Oh, you made the
I'm
motion.
rescinding my motion.
Oh, okay.
After what Commissioner Montero said.
Okay, is there someone else who would like to make a motion? Karen is making a motion that we do proceed with recommending this budget to the. Yeah. And is there a second as modified? And is there a second?
I'll second it.
Oh, Pamela seconds it. Okay, now we can discuss.
You got a
So
copy of this printed down.
do you want to take a little more time today and get this done?
We're past time.
Yeah, it's good.
So if you're going to have another meeting, you need to determine when that's going to be.
It's already scheduled.
Well, then you need to determine who your chair is going to be. Which is fine with me. I would vote for this right now because I think it's not so many changes that we can't do it with confidence because we are not the final answer. The Board of Commissioners is the final answer.
I'd rather do it now because it's sort of fresh. We have all, a number of people go, well, no, that's not right. Well, that's right. It's not going to get really that much better if we do it later.
You print this document.
So do you want to wait to print the document or should we call for the question and have a vote and see where we go from there?
Do we have a motion on the table and seconded?
We do. We have a motion. It's been moved by Karen, seconded by Pamela, that we do recommend the budget as we have revised it today. And we recommend it to the Board of Commissioners for their consideration for adoption.
I call for the question.
All right, question's been called for. Roll call vote, please.
Okay, Commissioner Alegria,
Yes.
Member Dieter,
Yes.
Member Fleck,
Yes.
Commissioner Board Budget, sorry, Chair. I'm tired.
Yes.
Board Chair Klezak.
She's currently not on.
Absent. And Lansing is absent. Commissioner Montero.
No.
Member Niebuhr.
No.
Commissioner Romero.
Yes.
Stolberg is absent. Commissioner Teeple.
Yes.
Commissioner York.
Yes.
Member Wilson.
Yes.
Motion passes budget recommendation to the board.
Okay. So we have completed our work. It will go to the Board of Commissioners when?
Close.
The next meeting, probably on that calendar list somewhere.
On the calendar.
No, it's not true.
Because it's at the next board meeting, so
It's the 28th.
then 26th, 25th.
What?
May 28th.
25th?
Thursday, the 28th.
Okay.
Thursday, the 28th?
Yeah, I'm looking at June, I don't want
May 28th.
Or the
So,
budget committee,
No, board meeting.
board meeting.
excuse me. So can I ask, as informational, that you send the revised budget to all of the budget committee so we can all see it?
She'll do that, right? Jennifer, she'll do
Yeah.
that right now.
I would also like to have a invitation reminder to everyone on the budget committee to attend that Board of Commissioners meeting. So that if someone does want to make some statements about the budget on an individual basis, they can do so.
Repeat, listen.
May 28th. That's a Thursday, Wednesday, Thursday.
At time.
9 a.m.
That's the next board meeting, but is that the date for the public hearing? I thought that was in June.
It's in June.
The public hearing is June 25th. And the board could consider the budget at the next meeting, but I do not believe we have enough time for the legal notice for adoption at the next board meeting.
And the chair isn't here, and she generally makes those kinds of agenda decisions.
Legal notice of public hearing of board to adopt recommended budget is scheduled for June 16th. They don't have another.
But that was 4 days after the last budget committee meeting.
So
We have
it'd be 4 days.
We have a very significant agenda on our May meeting.
And we don't have to tell you when, Kathy, your chair and such, what you're going to do. I am just asking that the revised budget document that we have done today gets sent to all of the board, the budget committee meeting members, and that we get an invitation to the, I guess it would be the public hearing, when the budget is going to be adopted by the board.
Let me ask you this, if on June 25th, something goes kapooey, and this has to be done by June 30th,
Then we have an emergency board meeting.
You gotta approve it by June 30th.
I know that. That's
You
it.
could consider, you have to take public hearing still. You could
Yeah.
consider it at the discussion at the next board meeting, should you have time. But then you at least get a sense of whether there's any reservations in advance of the public hearing piece after that.
That's if we have enough time on the
Yes, right,
agenda.
exactly.
But you cannot call each other and talk to that about how you're going to vote on it. Because we had that discussion and that training at the board training. So don't talk among yourselves about how you're going to vote. Because that's illegal.
No.
Has to be in a public setting, public meeting, not setting, public meeting. So, okay, I think that we are ready to adjourn our budget committee. I want to thank you all for your efforts. We have had some really good discussions, and I think we've done some good work. And I appreciate everybody. We had good numbers of people here. I've been to budget committees where there hasn't been too many people showing up that are appointed, and this has been really good. We've had a good turnout. I appreciate everybody. I think most everybody on the budget committee is new this year. So anyway, I appreciate that. And I look forward to seeing more of how transit district keeps improving.
Thank you for your leadership.
I motion we adjourn.
Oh, yes.
I'll second.
Second it. All in favor, say aye.
Aye.